After a mostly downward move last week for the equity markets and a downward start to this past week, this stock market's starting to look good, but will it continue? In my video a week ago, I talked about how it looked like the equity markets were poised to move higher. Well, that's exactly what happened starting midweek, so let's take a look at what we're seeing now. There is a link to that video in the pinned comments below. But before we get into it, I want to thank you for watching my videos on YouTube. You'll find two types of videos on my channel. The market review videos, just like this one, and the timeless investing and financial decision-making videos you'll find on topics ranging from paying off your mortgage to how to evaluate individual stocks or how to better manage your 401k and other investments. So what are we seeing now in the equity, bond, gold, and crypto markets? Well, let's take a look. As you can see, this past week, we started out in a very unhealthy looking market. And then during the last 2 days of the week, the market started to move higher with the NASDAQ finishing in first. Now, ARK has quite a ways to go here to catch up, but I like what I'm seeing here. And if we look back over the past month, it's been kind of a noodling to sideways market, but we are higher overall over the last month, except for small caps and ARK. And what about year to date? Well, year to date, this looks pretty darn good. You've got ARK finishing almost first. We've got the NASDAQ in first, followed by the S&P, and then followed by the Dow and the small caps. This looks very good. I like the way this looks. And then if we look back 6 months, you can see it's been kind of all over the place, but net, we're up in general, except for small caps and ARK. So this looks good also. How do the bottom dynamics look? Well, not much to see here, really. You can see they've been kind of trading places. The bottom forming indicator was down here, then it shot up here, now it's coming back down. The bottom confirmation level all over the place, and the confidence level kind of all over the place, but not very high overall, even though it's moving higher here. I don't know quite what to make of this because this is not much of a move here, and this is moving higher. You know, you could say this might go lower, but I wouldn't go there, especially based on the next graph. So when we look at risk versus opportunity, this presents a very nice picture. You can see how the risk acceleration, while it was way up here at 90 back here, and in fact the market's pulled back, you can see now it has plummeted down to about 35 or so. This looks really good. And the risk, the red line, has moved down quite a bit. It was up here also pretty close to 90, and now it's just a little bit above 70. So this looks very healthy. But while all this was going on, the opportunity level has been increasing. Some conflicting signals back here, but now you can see that the opportunity is winning out. That's why I say I don't know that I would call a down week in the next days or week, given what I'm seeing here. And if we look at the equity versus safety rankings, now remember these act fairly quickly, but you can see that the NASDAQ 100, while it moved here, and then it moved down here, now this week, it's right here in number 1. This looks great. I love this. And what about treasuries? Well, if we look at the longest duration treasuries, highest risk, you can see there was almost like a flight to safety going on here because people were piling into higher risk treasuries. And then they just plummeted, went from first to last place, stayed in last place, and now they're moving up again. So what do we have now? We have a healthy treasury market and a healthy looking stock market. Now, what I don't like here is that cash is staying stubbornly high. Now you can see it moved up again, and now it's staying here. I'd like to see this drop more before I call victory. I also like the fact that gold, while it was trying to come up here, has since dropped and has dropped again to last place. So this tells me that there's less fear of geopolitical risk and less fear of bank contagion, the fact that gold has dropped like this. So overall, I'm happy with this. We're not there yet, but it's looking much, much better than it did last week for sure. when we look at the buying and selling pressure, this gives a little bit of a different view into what's going on in the markets. So you can see here that the buying pressure, this solid gray line, has been dropping until recently when the market started going up and the buying pressure started going up as well. So this doesn't look too terrible here. For the S&P 500, again, buying pressure dropping over time here over the last month or so, selling pressure increasing over the last month or so, but we have a sharp rally here and an increase in the buying pressure. And what about the NASDAQ 100? These are a little more risky. So you can see we had very nice price movement upward here, and then kind of a sideways to slightly down move here. But the selling pressure, this orange line, has been in decline over about the past 3 to 4 weeks, while the buying pressure has been increasing and is shooting up very nicely here. So I like the way this looks. Hopefully this continues into next week. And when we look at the Russell 2000 small caps, you can see they haven't had much of a rally here and been kind of noodling sideways to slightly higher. Not much happening in the buying and selling pressure, although the buying pressure did cross recently when this rally happened. So we'll have to see how all of this looks next week. But hopefully this goodness continues. And ARK Innovation really been struggling, as you can see that here. Tried to rally, kind of went sideways. It's kind of fallen off here. The selling pressure was moving higher. This orange line, as you can see, the buying pressure, the gray line, moving lower. But I like what I see here at the end. We just need for this to keep going. Okay, so let's take a look at sector rankings. Now, I'm going to do this a little differently than I've done it in the past. So what you're looking at here is you're looking at the sector ranks on the top from last week, a week ago. And now I'm showing you the sector ranks from this past Friday, yesterday, on the bottom. So you can kind of see how things are moving around here. And you can see last week that gold and Bitcoin were right up here at number 1 and 2. Cash was way up here. Consumer staples was right behind consumer discretionary. And, you know, this was not really all that great looking, except that you got a bunch of technology up here. But I really didn't like the fact that cash was up here. Well, let's fast forward to yesterday, this past Friday, and you can see that Bitcoin's still number 1. We've got technology. This is good. I like that gold's moving down, more technology, and consumer discretionary is moving up. But what I really like here is that cash is moving down. So this looks really good. And what if we look at sector rank acceleration? So this tends to move a little bit faster. Well, you can see last week, a week ago on Friday, cash was ranked number 1. Intermediate treasuries were ranked number 3. I mean, this is like this is a flight to safety if I ever saw one. Now gold was down here, so gold was already starting to drop off, but there was definitely a flight to safety here. And consumer staples was way up here. Well, let's fast forward to yesterday, this past Friday, and you can see what's happened. So technology is up here now. I don't like the fact that the Dow is ahead of the NASDAQ 100, but I'm hoping this will flip as we go forward. Consumer staples is still here, not good, but consumer discretionary moved from way down here to way up here. That's good. I like the fact that cash moved from here all the way down to here, and it took intermediate treasuries with it. But you'll also notice that longer treasuries, 7 to 10 years, are moving up here. So this indicates to me that the treasury market is getting more healthy, which is a good thing. And what if we look at the treasury market over the past week? Well, you can see we had a big rally attempt here. It dropped off on Wednesday. Thursday was kind of flat, and then on Friday, we had a very healthy rally in the treasury market. So it's kind of all over the place here. We'll have to see how this goes. And what about that inverted yield curve? Well, it's still pretty inverted. You can see we were inverted 1.1% or 110 basis points back here in March. And then the curve really tried to become uninverted, but it's been kind of frittering away here. Still inverted by 55 basis points. We need to get out of this. It's just going to take time and some different actions from the Fed before this thing resolves itself here. So what is the buying and selling pressure telling us about how treasuries are acting? Well, if we look at intermediate treasuries, we had a nice rally here, and then things started to fall off, but then started to rally again. And during this time, when things were falling off, the buying pressure really stayed nicely above the selling pressure until just recently. So this actually looks pretty reasonable. Let's take a look at slightly longer duration treasuries, 7 to 10-year treasuries. Now, if we look at these, you can see a slightly different picture. We had a nice rally, fell off just like the intermediate treasuries, rallied again just like the intermediate treasuries, but we had a big spike in selling pressure here, which has fallen off dramatically, and the buying pressure is coming up now. So hopefully this will continue. And if we take a look at long bonds, 20-year treasuries, again, nice rally, a pullback just like all the other ones. And you can see there was quite a spike in selling pressure here, which has since declined. And the buying pressure is increasing as this price starts increasing. So this looks pretty good for now. What about gold? Well, gold had a really big rally here during the banking contagion. You can see that moderated here, peaked out right here, and has been kind of trailing off since. And you can see that the selling pressure was above the buying pressure, and now they're just kind of jostling back and forth. No real sense of direction here right now. Now let's take a look at Bitcoin. So Bitcoin rallied along with gold back here, but it continued to rally, not quite as steeply as back here. Had a nice rally, pulled back, and is now rallying again. You can see that the selling pressure really shot up here, but is now falling off. The buying pressure fell off, but it's now starting to go up. So hopefully things will look good for Bitcoin and cryptos in general going forward. Well, if we look over the longer term time frames like year to date in the past 6 months, the equity markets continue to look healthy. And in the shorter term, their health appears to be improving. Even the treasury markets are starting to show improvement. I don't see a clear indication of how the markets might move this coming week, but we have the Fed meeting on Wednesday, May 3rd at 2 p.m. Eastern Time. The Fed is poised to raise interest rates by another 0.25% or 25 basis points when they meet next week. And the markets give that rate increase an 83.9% likelihood of happening. Now, the Fed typically follows what the market is leaning toward, so you can almost surely expect a 25 basis point increase. I think it'll be a shock to the markets if that doesn't happen. But the economy appears to be slowing down, so let's hope the Fed doesn't say anything that would send the markets lower. I'm Calvin Rose, and thank you for watching Invest Smarter today. That's all for now. Pour it out, if I'm being honest.